Good afternoon, everybody. Welcome, welcome. Hopefully everyone had a great trading morning so far. All kinds of fun action going on today. Had a couple oddball things going on over at Thinkorswim. Thinkorswim, I guess the charting, given all the gaps and everything in their chat room, going absolutely berserk. It sounds like they had some charting issues today. Probably not going to be a whole lot of happy people over there, but aside from all that, before we jump in, as always, make sure to swing over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. And of course, in the newsletter, it was just recently revamped, where we kind of changed the layout a little bit, getting a lot of good feedback on that, and just overall a little bit more to the point. So make sure to sign up for that if you haven't done so already, so you don't miss anything important. Of course, over at the live Trader subscription and trial info section, that's where you can sign up for a free 3-day trial in the room. You can hang out with us for a couple days, see how we approach the markets, see how we trade the markets, ask some questions, and just generally have some fun. Really great environment to get into, just to kind of, get your feet a little bit wet. So make sure to sign up for that if you haven't done that either. Now, starting off, we have the news calendar for tomorrow. The news calendar for tomorrow, we've got a lot of stuff going on. We went from back-to-back days with not a whole lot going on, and now all of a sudden the news calendar is just packed full of stuff. Monday, we had a pretty good day without any news, and now today we actually had some news on the calendar, and today was not that great in terms of movement, so I don't know, 50-50. Maybe news on the calendar isn't necessarily that good of a thing, but we'll have to wait and see. Now, tomorrow morning at 4:30 out of the UK, we have the CPI for May, forecasted at 2.4%. It's the same as previous. At 8:30 tomorrow for the U.S., and this is when the big block of U.S. news comes. That's at the 8:30 mark. PPI for May, forecasted at 0.3%. The previous was 0.1%. Of course, we have the crude oil inventories at 10:30, and that's forecasted at negative 2.9 million. Previous was a build of 2.072 million. Now, keep in mind, today, a little bit later, at usually around 4:30 p.m. Eastern time, at 16:30, we have the API report that comes out that gives us a slightly better idea as to what to expect for the crude oil inventory. So make sure not to miss that number if you are a crude oil trader. And then we start hitting the wall of news at 1400 down to 1430. This is the big one that everybody's going to be paying attention to tomorrow, and that's going to be the FOMC economic projections, the FOMC statements, the Fed interest rate decisions, and then a little bit later at 1430, the press conference. The Fed interest rate decisions forecasted 2%, previous was 1.75, so looking for a little bit of an increase in interest rate. But, you know, that's the big one. That's the one that's going to be moving the markets tomorrow. So trading tomorrow afternoon, might not be very high on my want-to-do list. I mean, it's one of those things that kind of leads me to believe that tomorrow might be more of an early in, early out kind of scenario. Not really anticipating, you know, the market participants wanting to stick around much after 2 o'clock after that news is out of the way. Probably just rest up, come back for the next day. A little bit later after that, 21:30 out of Australia, the employment change for May forecasted at 18.0K. And then out of China at 2200, we have the industrial production for May forecasted at 6.9%. So pretty jam-packed news calendar. There's a lot of stuff going on tomorrow. So make sure that you do not lose track of that because, well, you don't want to be on the wrong side of news. That definitely doesn't feel that great. Looking at the charts, starting off on the euro is overall still range bound. I mean, you know, the big thing we were talking about yesterday is all this weakness that we were seeing on the highs. They keep missing the top, and if they do actually catch a rally up, we're looking to sell into it because, well, why wouldn't we? It's just a bunch of weakness up here. We did catch a little bit of a pop, but it didn't go far enough. We ran into resistance at 18,120, off of support at 17,645, and it's just stuck smack in the middle. It's not going anywhere. Up, down, it's just going sideways. So it's honestly the exact same game plan as yesterday. Nothing has really changed that much. It's the same scenario. You know, again, this could be a little bit of a spike into kind of a flag. It could be a flat bottom triangle. It could be a pennant. It could be a lot of things in here. And until we start seeing some movement, I'm not really going to want to do anything on this because it's just not that great looking. So on the euro, it is the identical game plan that we had yesterday. I am sitting on hands until we can get to one of those areas of interest. Now, as a refresher, the areas of interest, I want to see the market rally up to at least 18,265. I'd prefer to see 18,520 or 450. I really would like to see 18,805. And if it does want to fall a little bit lower, we have support at 17,315 all the way down to 16,770. So just as a refresher, but nothing's changed. So we will wait for the euro to kind of figure out what it wants to do here. Over on gold, gold is still an absolute choppy mess. If you are playing it as a range, you're probably having a very good time. The range plays have been working out beautifully. The level of support we were talking about yesterday at 1297.8 with an offset. Remember, a slight bear trend to it. Offset it by 10 ticks or so. That means that 1297.8 becomes 96.8 minus 10 ticks. And that worked out just about perfect, I would say. I don't think there's much better of a bounce that we could really ask for than what we had right here this morning. So a phenomenal bounce in the early morning session, and that takes care of that 97.8 area. The next one is 96, which means, again, 95. We have the major range lows down at 94. Everything kind of stacking up at the same place down here, creating a zone of interest. Now, if the market does, for some reason, rally higher, which it definitely could do when it's in a range, it just goes back and forth, looking to sell above the highs there at 7.8 all the way up to 10.1, with actually minor resistance just tucked away inside there at 9.7. For the most part, gold's still in a range. We had a beautiful attempted breakdown, which failed all the way back up. Called that one yesterday, worked out beautifully. Now we're waiting for another one, and kind of the same boat as the euro. We're waiting until it gets out of these little ranges that it's got going on so we can jump on board with potential trading opportunities. On crude oil, oh man, this 66.37 area has been an absolute struggle. We were talking yesterday on how crude oil has to get above this if the buyers are going to take it over. And if they fail, we're probably just going to see them push right back down again and fall apart back down to the low. We did get hung up on there for, what, 12 hours that we got stuck on 66.37. Tried going up, failed, tried going down, failed. Ow. We keep getting magnetized to the same area, and we're just not really getting away from it. So kind of carrying over from yesterday, what we really want to see here is crude oil breaking above that 66.37 area with some conviction. Now that we have so much chop in this little range here, I would really like to see a good, strong breakaway move. And given the fact that tomorrow is inventories, we might have to wait until tomorrow for that to happen. It's kind of a bummer because trying to trade around inventories can be tricky in and of itself, let alone right on top of major support and resistance. We'll have to wait and see. Right now, we're just basically on top of it. I mean, it's trading at 66.44 right now. That level's at 37. It's a give or take battle at the moment, and I'm just not really convinced. I need a little bit more information before I start throwing anything on crude. And the way that it's sitting right now, I would rather just wait for an attempted pop up to 66.90, find some sellers there, or buyers taking profit, push the market back down to maybe retest 66.37 as support, and then we can go from there for a potential rally back up to target that 68.17 area. For right now, though, we're smack on top of a zone of obvious interest. Really more comfortable just sitting on hands and waiting. Unfortunately, it's another one of those wait-and-see kind of games. We do have a nice ascending wedge. We're at the top of that ascending wedge. We're also at the top of the possible channel to the downside. So we are in a cluster of resistance. We have the horizontal resistance at 66.37. We have rising ascending resistance from the wedge and falling or descending channel top, all lining up in the same place there. So that's probably why there's so much congestion. That's probably why it's such a choppy mess right now. But I think for now, the best plan of attack is just to wait. One level, if it does end up breaking down, because again, inventories can be very volatile. If it does start breaking down or up, we need a kind of contingency plan, if you will, as levels of interest. And one of those areas is going to be right there at the base of that huge rip higher. Now, I think we'll do the same thing we did yesterday. Go to a slightly smaller orange line there, but that's going to be at 65.16. Looking for the market basically to come back to where it had that big blow-off move and see if the buyers want to defend it and bounce it up, or if the buyers give up on that level, we start breaking underneath it and testing it as resistance a little bit later. A lot can happen. I mean, it may seem like it's really far away, but inventories can easily spike crude $1 without much hassle, and, well, that might just be an area that we have to keep our eyes on. Another thing to keep in mind, since it is a really strong blow-off move, we might also want to consider looking at deviations to the upside if it does pop higher, right? So we have a deviation to the upside at 67.54, right there. 67.54 is a deviation to the upside as another area of interest to see if they want to double up this big blow-off candle into resistance and find a pushback from there. Again, you know, all of these pushbacks that I'm looking for doesn't necessarily mean that I want to short all the way down to the bottom, but what it does mean is that it's an area that we can potentially look for the pullback to occur to buy off of that bounce from yesterday. And again, we talked about all of that yesterday as well. So that's kind of the game plan right now for crude, is just sort of waiting, unfortunately. And then we've got the S&P. The S&P and most of the index markets, they opened up and they got trashed. I mean, the open on the index markets was heavily bearish. We're now seeing a little bit of a reversal on that, but for the most part, I mean, they opened up and just got tanked. And that amount of selling pressure, we even posted on Twitter, where when you have that amount of selling pressure, it's very likely going to continue for another attempt. And that's exactly what happened before potentially putting in a bottom. And now we're kind of rallying back up and mostly just kind of going sideways on the bigger picture. On the 4-hour chart, we're just stuck inside this little zone here for the S&P. It's having a hard time doing anything right now. So I think the big thing that we really need to see is, on the S&P, are we stuck at the top and that's why we're consolidating? And if that's the case, then we should start seeing this correct a little bit lower into some of this cluster of support down here. If it fails to do that and starts breaking higher, then we're starting to think, okay, this might be going a little bit too far too fast. Exhaustion setting in, and we have resistance above us at 28.06 at the moment, and that 28.06 level goes all the way back to here, and that's back in early March, and then the next one above that is back in early February. So plenty of levels to work with above us and below us, but right now we're just stuck smack on top of that channel, and we might have to wait for FOMC tomorrow to kind of clear up some of this congestion, because right now, man alive, these things are, it's all wait and see right now. Wait for the dip down to 78.5 or wait for the pop up to 28.06. Where it is now, I think it's mostly just a fading market. Fade the highs, fade the lows, stay out of the middle because, ooh, man, the middle can be really nasty when it's stuck like this. And that's just kind of the scenario we're in right now. So that kind of does it for the future side of things. There's a lot of waiting and seeing. It's not necessarily a bad thing, especially considering that we have some big news coming out. I would almost rather be in a wait-and-see scenario going into news, because then the news usually creates the decision, instead of making a decision going into news and then being completely wrong because the news shoved your stop down your throat 100 ticks, right? So maybe it's a blessing in disguise. I don't know. But right now, the futures markets are very kind of wait-and-see territory, and that's really what I'm looking to do going into tomorrow, FOMC day. Maybe tomorrow morning we'll have a little bit more info, but for right now, it's a lot of fading. Fade the highs, fade the lows, stay out of the middle, and wait for news. That's about it. So normally, now that the future side of things are done, I would transition over to the stock side of things, but with the charting platform having all kinds of issues, my charts look absolutely train-wrecked right now. I've got gaps all over the place, and it's just, with that Thinkorswim crash, really screwed up the charting. So there's not really much. I would rather wait for that charting to kind of fix itself, if you will, before we go in too much in depth. So I think today will probably be a little bit of a shorter recording. But if there are any markets that you want me to take a look at, I'll give a couple minutes to you folks to type those in, and I can cover those for you. But aside from that, it's hard to want to do much when I've got gaps all over the place on my charts and the levels. When there's been a data problem, how much do you trust the levels? It's just one of those things that I'd rather kind of let it do its thing before we start throwing on any major levels or anything. So I'll give you guys a couple minutes. Type in any markets you want to take a look at. If we don't see anything, then we'll just wrap it up a little bit early. We'll be back to the regular schedule tomorrow, looking at stocks, as long as Thinkorswim decides to cooperate. Again, for those of you who use Thinkorswim out there, I'm not sure what happened. I know I was watching in their chat room because my charts just stopped moving. I was looking in the chat room, and it sounds like a bunch of other people had the same issue. They were calling in tech support, and just really, really bad situation for Thinkorswim. And that's a lot of volume. When a charting platform like that goes down, that's a huge amount of volume that can no longer trade for a little while. Granted, it was only probably a total of 30, 40 minutes, but that's a lot of volume, right? There's 20-some thousand stocks, or however many thousands and thousands of stocks there are, not to mention futures, Forex, I mean, all the things that they offer, and you can't do anything with it. That probably might explain why this morning died off so quickly. Everything was moving really good out the gate at 9:30, 9:40, and then 9:50 and 9:60 started at 9:60, 10 o'clock. 10 o'clock started hitting, and everything just died. And the only thing I can really look at is the fact that a huge charting platform in brokerage went down for a little bit. And I think a lot of people just hit the exits, called it a day, and figured they'll come back tomorrow, or maybe move brokerages. I don't know. Not seeing anybody typing in any markets, no problemo there. That's going to do it for today. As always, it doesn't matter what market you're trading. Even if the markets aren't doing anything, always make a plan, trade the plan, follow those rules, and you'll be A-okay. Underneath the video, click on the subscribe button, click on the notification bell to the right of that so you are notified every time we go live. We do this Monday through Thursday. Don't forget to sign up for the newsletter. Again, we did just revamp that. Lots of really cool stuff going on there. But aside from that, rest up, enjoy, make a plan, trade the plan, follow those rules, and it'll be all right. Until next time, we'll see y'all tomorrow.